Hello and welcome to CryptoWeeklies. Today in this video we discuss Bitcoin. None of the content financial advice. Right now per our composite risk score for Bitcoin, Bitcoin is not in an accumulation zone as of today. A lot has changed over the last 2 to 3 weeks, as we mentioned on our YouTube channel. The link on the bottom, this website, the link to this website is on the bottom of the screen. This is my own website, CryptoWeeklies.com. It holds all of the analysis, not just for Bitcoin but for all major other cryptos as well. What we have over here is again 2 to 3 weeks ago. Now that the price of Bitcoin is at around 72k, 2 to 3 weeks ago, we released a video on this channel. This you can check over here. This link from the website goes to the YouTube channel, and if you check out about Bitcoin or BTC over here, you'd find that the outlook for BTC for 2026 there was let's type in $80,000 over here. That would be a better indicator. So 2 weeks ago, this video we created. Back then the price of Bitcoin 2 weeks ago was, if you check over here, weekly price action over here was reeling at the lows of about 60 to 63k. Now the price is almost $10,000 higher. This analysis that we conducted was again largely due to the monthly candles of BTC, and looking at the last bear market and comparing March of the last bear market, how the candles, again not the hollow candles but the momentum or Heikanshi candles kind of shaped for March, where again following 1 2 3 4 the fourth March for that year was the fourth bearish month for 2025, starting the October top for Bitcoin. This time around March is 1 2 3 4 5 fifth bearish month. If March were to have a similar candle body this time around like it did back in 2022, the end point for March could be very, very close to $80,000. So that was always the area where price action could go in and out, counter trend rally. Just looking at the support that Bitcoin enjoyed in 2025, there was one simple arithmetic, like in 2021 in the bear market year, this yellow line was once tested as a counter trend rally, and then it got rejected at that point. Something similar is happening in 2026 following that 2025 support. Like in 2021 support, price in 2022 once went to that level. Something similar is afoot right now, and again this could well coincide, that ongoing rally could well coincide with, right now the 20-week simple moving average is 84,000, but if you extrapolate that red line over here, these averages could meet the yellow line at around $80,000. So that's the area, and thanks to this rally from 60k, as low as about 61k to now at $72,000, thanks to that rally, the overall composite risk for holding Bitcoin unfortunately has gone out of the accumulation zone. That's because the overall composite risk is higher than 0.3. This risk is made of 4 or 5 major models: the logarithmic regression based, deviation time weighted average price based deviation, 20-week simple moving average price deviation. This accounts for about, roughly speaking, 60% of the weightage for that overall composite risk, and then the rest 25%, roughly speaking, distance from all-time high, and then correlation with S&P 500 volatility and Sharpe ratio. They are about 18% together. So why has Bitcoin moved out of the accumulation territory? Again, this composite risk model says that, again, difference between the price and the mathematically derived polynomial regression based fair value is now minimal. So this gray line over here is the 2 degrees of freedom polynomial regression based fair value estimation, where again tries to cut the price of Bitcoin in 2 halves. The upper half is where price is overvalued, the lower half is when the price is undervalued, considering its own price history. Technically speaking, the price is still below the fair value, but the distance has gone down quite a bit. That's why the risk level has increased from 0.36 to 0.44. So this one model the increase or the delta has shifted so much that there is 8% more risk accumulating now in March compared to in February. So that was one reason that the overall composite risk has gone down. Has gone up and out of accumulation. Similarly, time weighted average price risk. So this white line over here is the time weighted average price. This is measuring the current price, not in just relation in isolation, but as a comparison where the asset has spent its entire life. Above the white line, that's where Bitcoin has consistently been. Even at the end of the bear market, the drops have been higher than the time weighted average price, but you can see the delta between the price and the time weighted average price has increased quite a bit since February. Back then, the difference between the price and the time weighted average price was 129%. Now it's at around 163%. So a lot has changed. The time weighted average price has risen from that $27,300 to now at around $27,700. That was always going to be the direction for the time weighted average price, as since essentially 2015, almost 11 years now, price of Bitcoin has consistently been above the time weighted average price. That doesn't mean that this model does not help in accumulation or distribution analysis. Just that whenever the price risk for Bitcoin is less than 0.3, that's when or the risk level 3, that's when accumulation makes some amount of sense. Again, if you are trying to accumulate for more time again, rather than just the exact bottom, a range of accumulation, risk levels 4 and 5 also make a compelling case for BTC accumulation. Right now the risk level is risk level 7, and 7 is again either a midpoint of the bear market drops or a bull market rally. So again, risk level 7 is when the bull rally takes off, like it did in 2023 or in late 2021, or the bear market midpoint of the bear market drop, like it was in 2018 or in 2022, before the sharper drops occur in the later part of 2022 or in later part or later half of November of 2018. So it's kind of close to a cliff in terms of bear market drops, this risk level. So that's why, again, as the difference between the price and the time weighted average price is ever increasing since February, kind of first week of February got away from us, and then as the difference between the price and the time weighted average price at the bottoms, if you check at the bottoms, let's say level 4 or level 3 risk, the difference is somewhere between 30% and 60%. Over here, similarly, 25% to about 60%. So if we are ways off from that level. Let's say a 60% increment of that 27, or just to round it off, by the time where the price gets really close to the time weighted average price. Time weighted average price could well be at around $30,000, given that the fact that in the month the time weighted average price rose by about $500. So a $30,000 averaged out time weighted average price, just to tune out the noise, and adding a 60% on that. If you were adding 50%, it would be adding 15,000 on 30,000. It would be 45,000. Adding 60% would be 18,000. So the price at the bottom for Bitcoin could be at around 48k when the time weighted average price based risk level 3 accumulation or risk level 4 accumulation trigger is indicated. So we are away from that level at this point. Mostly, again, the distance from the all-time high and the overall peak bottom analysis for not just Bitcoin, for all major cryptos together say that the risk level over here has risen slightly from that low of about 12% or 0.12 to now 0.16. So that's the change that has occurred since the last 1 month. The machine learning based price analysis for that non-euphoria peak in March says that as high the high for Bitcoin in March 2026 is $82,000. This model is trained on weekly price action of Bitcoin since 2014, and use a seasonal ARMA based box Cox transformation, and for getting that time series analysis based forecasts for the next 6 months, and the confidence levels are generated using standard deviation. The yellow line is one standard deviation bull case for Bitcoin, and just looking at 1 month at a time, just towards the end of the March, the one standard deviation euphoria ceiling is 82k. The panic case for Bitcoin till let's say May is at around the non-panic bear case for Bitcoin is at around 60k. If there is a panic between now and May, the drop could be at again as confluent with that 48k model, the 2 standard deviation 95 percentile bear case. So that means only a 2.5% chance that the price goes lower than $48,000, because the bear cases and the bull cases have 2 thresholds, one to the downside and one to the upside. So together they are there is a 95% chance that price or confidence that the price stays within the bounds of both the orange line and the green line. Just to be fair, if there is a drop, there is only 2.5% chance of going below and a 2.5 chance going above this orange line. So that orange that green line, the panic case for Bitcoin till about late May is at around 47 to 46k. So all in all, again, as the estimated risk profile or the composite risk for Bitcoin is at around 31% right now, for all of these models, price is not in an accumulation phase. An estimated bear market bottoms for Bitcoin, again, the worst case scenario is somewhere between 32k and 40k for Bitcoin. That again, we are very far away from that price. This time weighted average price just for this analysis and ever increasing price. Right now it's at around, roughly speaking, 41k, but this as the time weighted average price kind of matures from that from the benefit that price of Bitcoin is consistently above that 41,000. This base bear case could well be in towards the end of September, October 2026, could well be close to that $47,000. So that's the number that I'm sticking with. And with that, let's conclude the video. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.